Professor Geiger, welcome and thank you so much for your willingness to continue the Q&A, even though the conference has already been completed quite a few days now. We have 6 questions in total that have not yet been addressed during the Q&A, so I'm just going to run through those with you, and we'll try and address them as best we can. So the first question I have for you is, in a COVID-19 era, to what extent do business models inform the going concern opinion?
Thanks. So actually, this was kind of related to one of my COVID-19 research questions, in the presentation. I think that there will certainly be some business models, for instance, face-to-face retailers, probably except for groceries, and restaurants and industry and economic sectors that are going to see many more going concern opinions than others. So this idea of kind of shifting your business model has been just something a lot of businesses have had to have undertaken. So how well they are going to be able to execute the new business model is potentially untested territory. So they could have been kind of great with what they were doing and not so great in kind of their new modified business model during the pandemic and post-pandemic. So I think, we will see that there are going to be some things that help as far as just industry. And the real issue to me is kind of switching business models to be as effective kind of in the new model as the company was in the old model. So probably certainly depends on how radical the new model is, but those are the kind of the driving questions, I think. Mm-hmm. And I think there's kind of an industry issue in there too. So some industries are going to be kind of hit harder than other industries.
Yep.
So I think as far as going concerns go, we might see a lot more going concerns, just because of the industry in one sector versus, another sector. So that will be kind of interesting to research as well.
Yeah, I can imagine. So thank you very much. The second question we had is, to what extent do auditors consider potential future government interventions, for instance, from a central bank, when making a going concern decision?
Okay, so I think that auditors will have to do more of that just because it's much more pervasive, and many businesses have depended on the government interventions to survive, certainly some more than others. But I think as far as current reliance now on past government intervention, we kind of know how to account for that. That is kind of historical. I think the real difficulty is going to be trying to figure out whether there's going to be another wave of government help and how much the client will be able to benefit from that. Trying to figure out if there's going to be another wave, and then trying to figure out how much your client is going to be able to benefit are two extremely difficult questions. So I think, it has to be considered because it's certainly going to be part of the business landscape. So it can't be ignored, and it's going to be maybe critical for, some businesses literally to stay alive. And for other businesses, it might just mean that they fare better than they would have without it, but would be, still a going concern.
Mm-hmm. Thanks. The third question we had was more of a comment. It says, we should not categorize type 1 and type 2 as errors. The standard is not to predict bankruptcy. It is to express substantial doubt, which is a lower bar.
I agree 100%. I don't want to get spanked for this one because this is not my terminology. If you kind of read some of my earlier papers, I painstakingly would go and explain these are really not errors. But from kind of a expediency standpoint, and I know it kind of paints the wrong picture, so I apologize for all academe, I guess. We refer to these as type 1 and type 2 errors, particularly for type 1 errors where companies get a going concern and then they don't go bankrupt or they don't kind of fail and they do continue in business. It's difficult to call those errors. Potentially, companies that do go out of business, that don't get a going concern opinion, in the set of financial statements before, could be more like an error. But like I mentioned in the comments during the presentation, I think it's going to be really hard to call all of those 2019 opinions that were clean errors
Right.
when companies go bankrupt in 2020, because there is no way on God's green earth they would have been able to predict, the extent of this, pandemic and the economic disruption. So, you have to kind of even take those with a grain of salt sometimes. So I agree with the commenter. I bow and humbly apologize for the terminology that we use, but I view it more as kind of academic shorthand.
Yeah.
So please don't take offense if we refer to it as an error, because, I agree, it's not an error. The bar is there some issues there that the auditor wants to have the reader of the opinion aware of?
I'm sure the audience member is very happy with this explanation. So thank you very much for that. The fourth question we had is, what is your opinion on the potential effects of uncertain going concern opinions on financial market? How to restore investors and stakeholders' confidence with the help and coordination of different regulatory agencies?
So, I think this is a difficult question.
Mm-hmm.
So in the presentation, I do applaud efforts like the ICAEW, kind of in England and Wales, to come up with a publication that addresses going concern issues for users of financial statements, not necessarily someone that's in the financial reporting environment. So I think that education is one of those pieces, but we can't just kind of educate everyone as to what a going concern is and then kind of be done with it. So I do think regulators need to be flexible, with their oversight of this. These are pretty much unprecedented times. So I think there needs to be some documented professional judgment and some leniency and grace when it comes to what actually happens down the road.
Yeah.
Because it's very, very hard to predict in, calm times, let alone kind of now. But again, we can't just issue going concern opinions to everyone that has financial statements.
Sure.
Because of the time. So there has to be some professional judgment.
Mm-hmm.
And I think that would bolster the usability and the benefit to stakeholders and kind of increase the confidence in going concern, opinions from auditors.
Yeah. Well, thank you very much. This brings me to the fifth question. To what extent will a COVID-19 going concern opinion bring real information value to, for instance, investors? And this is a nice wording. Or is the majority subject to a lot of boilerplate wording?
Okay. So I do think, I think it has a chance to bring some real value to investors. But I also think that auditors aren't the only player in this system. So I think a lot of that's going to come from management and their reporting disclosures, and then the auditors ensuring that those disclosures are robust and informative, regarding the business and the business's particular circumstances. So I would hope that some of that individualism would be reflected in some audit reports, but I also think that we might see a lot of similar language, because a lot of this is about general uncertainty and disruption across multiple sectors.
Yeah.
So that kind of brings it to, you can't really be too specific about some things, because it's just a broad brush of issues that are concerning or kind of uncertain. So getting back to the boilerplate, I'm assuming it was the boilerplate language for opinions. I think we might see more of that maybe in the opinions, but I think you have to realize that that's because the auditors have already done the heavy lifting, kind of making sure that the client's disclosures are robust and informative. And if they're really good, then to me, some of that boilerplate language is more appropriate than not. So you have to kind of see what you're looking at and what the auditor's already done.
Mm-hmm. Okay, thank you very much.
To make sense of it.
This brings us to the final question of the remaining Q&A questions. Which role do you expect that the local bankruptcy laws or court foreclosure interventions during the corona crisis will play in GCO considerations and outcomes?
Yeah, so this was actually kind of related to one of my future research questions as well, as far as kind of differences in kind of localities.
Yeah.
But I do think that the local bankruptcy laws and interventions, I mean, they have to play a role in, the going concern opinion. So if things are different in one country, that should also be kind of reflected in the rate of going concerns, maybe the accuracy of the going concern, as well.
Yep.
But I think it's just another big piece of information that the auditor has to consider, along with all the other information in kind of coming up with a going concern opinion. So some jurisdictions have basically said they're going to delay court cases. So maybe a delay might be different than actually getting to court. So whether you kind of get the case heard this year or next year or the year after, it's still kind of in the courts. So that timing issue is, I think, separate from getting it into the courts in the first place as well. So another facet of that issue.
Mm-hmm. Okay, very clear. Thank you very much. Professor Geiger, thank you so much for participating in this post-conference Q&A. I wish you all the best with your research, and on behalf of the Foundation for Auditing Research, I want to thank you for your participation.
Thank you. I enjoyed it thoroughly.